Saurabh, I have one question. You always believe in bottom line investing, not so much micro move. Just thought on mid cap and small cap moves. So, because you traditionally believe when rate goes up, small cap and mid cap normally underperform, what do you think there is a bit risk? Especially there is a lot of retail money which is pump up a lot mid cap and small cap. What is your opinion?
So the distinction I think we need to draw is if economic growth stays strong, even though rates will go up and central bankers naturally will say growth is too strong, let me try to dampen economic growth a little bit by hiking rates. As long as growth stays strong, GDP growth stays in the 7-8% region, I think small and mid caps will be fine. I think where there will be a challenge, regardless of market cap, is companies that don't generate cash flow. And I think this is not just an India problem, it's a global problem. If a company that doesn't generate cash, it could be listed, it could be unlisted, it could be Indian or American, then you really are going to be in trouble, because I think we're in a classical rate hike cycle, potentially looking at say 200 bips over 2 years. That's been a classical Federal Reserve rate hike cycle, is 200 to 250 bips over 2 years. In that sort of circumstance, companies that don't generate cash, don't make money, regardless of market cap, I think will be in trouble. Through 2006 and actually on 2007, small and mid caps did spectacularly well.